The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. My name is Patrick Kim. I'm the Work Comp Specialist at Beere&Purves. Thank you all for joining me on today's webinar. So for today's webinar, I'll be doing kind of a high-level overview of workers' compensation. And the goal of this webinar is to pretty much just make sure that you're all a little more familiar with workers' compensation as a product, so that can become part of your sales repertoire. And more importantly, add another line of coverage onto your groups. So as some of you are already experiencing, commissions are getting cut for the medical groups. So in order to make up for the loss in income, we need to try to write some more groups or add more lines of coverage onto our existing book of business. So everything we go over today is general information and again can be applied to really any work comp carrier in California. Also, this webinar is in fact being recorded, so if you do miss anything, you can rewatch the webinar via the link that will be sending to you via your email. So for today, we'll be going over the following: just workers' compensation as a product. What does it cover? How to service it essentially. Workers' compensation underwriting. What items are needed to
Bedrock, and Scribe said it was free, which I was like, that doesn't
work comp process.
Right.
No, it's not. That's
It was
interesting.
like $100 or $600 a month, I think. So
Okay, yeah. So there.
And workers' compensation gotcha. Sorry, there's a little technical glitch there, so bear with me. And another item we'll be going over is the new exclusion rules for workers' compensation. And then we'll finish off with a short Q&A session. So let's start off with work comp as a product. So what does workers' compensation cover? And again, essentially everything is covered on the medical side, so long as the injury or claim in question occurred on the job or because of the job. So a clear example would be anyone that's ever gotten carpal tunnel working at a desk, or perhaps get into a car accident meeting a client. Workers' compensation would cover the medical services needed to treat that employee, as well as any temporary or even permanent disability claims associated with the injury in question. So unlike the medical side, there's no waiting period or co-insurance when filing a work comp claim. As long as the paperwork's ready to roll, the claim will get covered. So generally speaking, what to do when an employee gets injured? The first thing to do is to have the member use the carrier's nurses hotline. I doubt that there's a single work comp carrier in the United States that doesn't offer some sort of a nurses hotline. And this is because the carrier really has an incentive to offer this hotline to try to triage members to get them away from the really expensive emergency room visits, as well as to help the members get medical services as quickly and as efficiently as possible. That way they aren't trying to frantically call XYZ hospital to get service. They can just call the nurses hotline, get immediate medical attention, and then be directed to an appropriate medical facility and provider as quickly as possible. The second thing to do is have the member file a work comp claim form, and this is called the DWC-1 form. It's specific to California. And this claim form, again, is good for any California work comp group. With the completed form, just make sure to send one copy to carrier for processing, and have the group's administrator and the injured member have a copy as well for their records individually as well. And of course, in the event of a critical medical emergency, just have the member or staff call 911 to get that person serviced immediately. And then after the 911 call, the group's administrator will then have to report the claim to the carrier directly. So in terms of finding a provider or getting serviced, members just really need to use the carrier resources in order to find a provider or treating facility. And this is because if a member just shows up to a hospital or a doctor saying they need treatment for a work-related injury, the provider or the facility may refuse to provide services. And this is because the provider or facility does not want to get into any sort of legal trouble because neither party is qualified or licensed to treat work-related injuries. For workers' compensation, typically when a member goes for an appointment for an injury of sorts, typically the first question asked is, is this a work-related injury? And that's to make sure that the member in question is being directed to a work comp injury physician who is trained, licensed, and specialized in order to address those sorts of injuries, as well as to properly file the claim with the necessary authorities. Now, it is possible for members to pre-designate their personal physician to treat their work comp injuries, but this requires the member to complete another form. It's called the DWC 9783. However, the caveat is that the member's physician needs to agree to be paid on a work comp payment schedule. And it really isn't a very popular option with both the member and the provider, because this means more paperwork for the member. And providers that are not work comp physicians, licensed, trained, etc., they're rarely going to agree to be someone's work comp physician just because of legal concerns. Another thing to consider regarding a work comp claim is that in the event of an injury, employers must authorize a staff member to seek up to $10,000 in medical services. So if the treating work comp physician determines that the injury was not work-related, the injured member may not seek medical services in excess of $10,000. So let's say I'm off to a client meeting, and on the way to the meeting, I decide to, my meeting gets canceled, so I decide to go shopping or whatever. On the way to the shopping center, I get into a car accident and I get critically injured. Work comp, and I try to file the claim as a work comp claim. When I file the claim, I'm allowed to charge up to $10,000 in medical services in terms of painkillers, rehab, whatever. But the moment the carrier finds out, but once I hit that $10,000 threshold, the carriers during the meantime is going to investigate my claim and find out, okay, what was I doing at a shopping mall? Did I have a meeting, et cetera, et cetera. And if they find out that my injury was caused because of a non-work related incident, then they're not going to cover any services beyond $10,000. If I do wish to petition, that's perfectly fine. That's an entirely separate process that would have to get the state involved. For those situations, we as brokers almost never get involved because of HIPAA compliance. In addition to any sort of claim really or claim petition is resolved between the carrier, the member, and in some extreme cases, the state as well, specifically the Department of Industrial Relations, the Workers' Compensation Department. So let's go on to the workers' compensation underwriting. Now, for work comp submissions, the first thing underwriters really look for are classifications, such as SIC codes or class codes. Bear in mind that class codes and SIC codes are very similar, are not the exact same thing. An SIC code refers to an industry classification, whereas a class code is a little more specific. It's more of an employee classification, like a salesperson or clerical office person. And the reason the work comp carriers look at these classifications is because they want to make sure that the submissions are an acceptable risk. And the logic and execution is quite similar to how Delta Dental provides Tier 1 and Tier 2 rates, or just flat out rejects submissions. Groups that work comp carriers are targeting will get favorable rates and will likely get expedited during the underwriting process, whereas groups that are not quite the carrier's wheelhouse or are considered high risk are likely to be underwritten with a fine-tooth comb, get higher rates, have additional missing items needed, like a supplemental application, any sort of certification that they do have some sort of safety program in place, or worst case scenario, the submission will be rejected outright. Now, once the underwriter has determined that the submission in question is within appetite, the underwriter will then start taking a look at the operations of the group in order to ascertain grounds for additional credits for premiums, or perhaps to even just flat out reject the submission. Some things they'll be looking into and asking is, does the group have an ergonomics program? Does the group have a safety manager? is any safety equipment like back braces, gloves, specialized boots, or floor padding, any of that's used. And all of these items are utilized by the underwriter really to justify giving additional credits. Kind of the rule of thumb is that the more a group can speak to how safe they are, the more willing an underwriter is going to give credits. Typically, underwriters, when they underwrite, they're really looking for kind of the red flags, the bare bones part that helps them justify giving a quote, whereas anything on top of that, anything that can speak to the group's safety history or safety programs they implement, can really help the underwriter justify additional credits when they set out to approval, or even just authorizes them so they have something on record to immediately authorize giving additional credits to a group. Now, bear in mind that underwriters are also going to look at a group's claim history and the group's work comp RAF, called an XMOD, assuming the group has been in business long enough to get a work comp RAF, also known as an XMOD. And again, the group's claim history is also used to justify credits or reject any sort of high-risk group. So even if a group traditionally has a very safe record, let's say there was a string of bad luck, lots of carpal tunnel issues, thrown out backs, etc. The carrier was then going to look at that group more finely and say, okay, and consider, was there any lapse in any sort of in the execution of their safety program, or did the organization just flat out decide to remove that safety program? So this is for the general workers' compensation workflow in terms of, from submission to quote to bind. So the first thing we typically start with is the submission of a universal workers' compensation application. This is called the Accord 130, and it can be pulled from anywhere on Google, essentially. Once that application has been submitted, the carrier is going to review the application and the group's claim history. And again, they do this by looking at the group's work comp RAF. And if the group doesn't have one, they might reach out to whoever's submitting and say, hey, can you give us a loss run report? This is essentially something that every single work comp carrier must provide to their client without question. It's essentially just a record of when this person was with a particular work comp carrier, what sort of claims did they have, if any. How many claims did they occur? What were the costs of the claims? And was there any sort of complications related to the claim, like it was investigated, or was it just a very basic scrape and fall sort of thing? Now, when the submission has gone through underwriting, a quote does get generated to whoever submits the initial quote request. So unlike in the life and health side, where we quote, underwrite, and then sell, workers' compensation is the reverse. It's underwritten first, quoted, and then sold. And kind of the nice thing about this is that what you quote is what you will sell, instead of kind of life and health side where enrolling members can leave and enrolling members can come back on, where it's a little more complicated in terms of getting a clear picture of the size of a group as well as what's going to be sold. At least for work comp, what you quote is what you get and what will be sold. Now, if the group does accept the quote, all really one needs to do is just notify the carrier or underwriter in writing, ideally email, and send in the appropriate work comp waiver forms. The carrier is then going to send physical copies of the group's work comp policy doc, invoice, and welcome letter to the group directly via post mail. There's really no need to get that first check. The group can just simply respond to that first invoice. Typically, a carrier is going to offer either a physical invoice option where the group just responds to invoices directly, or there's going to be some sort of online auto payment option that's becoming a much more popular option and kind of helps take away some of the concerns about groups forgetting to pay their premiums. And of course, after the group is sold, if there's any sort of changes on the part of the group, it's important to let the carrier know so that the work comp policy itself can remain updated and kept up to date. And so that sort of leads into the work comp gotchas. Really, for workers' compensation, the only gotchas really are to make sure that the policy is kept up to date at all times. So one example would be keeping the premiums up to date. For workers' compensation, premiums are calculated based upon payroll. And as we all know, payroll fluctuates from time to time. There can be new hires, there can be terminations, there can be maybe promotions, or maybe it's a seasonal business, so sometimes there's overtime. The carriers need to know essentially if there's a significant change in payroll. A significant change in payrolls means a significant change in premiums, and we just want to make sure that the premiums are kept up to date so that there really isn't any surprises. Another consideration, very important consideration, actually, is when there's any sort of ownership change or any sort of entity change. This needs to be reported promptly, and more often than not, this is kind of a point of contention for a lot of groups, in which unfortunately causes a lot of groups to kind of go haywire. This is because in order for in the eyes of the workers' compensation carriers, they see a change in ownership or a change in entity as a new business entity that needs to be covered by workers' compensation. So what the carrier needs to do on their side is terminate the old policy and write a new policy for the new organization. So let's say we have ABC Company, and they have one owning member, 100% single owning member, and ABC Company is a corporation. Let's say ABC Company gets a second owner and decides to change to an LLC. So this is a brand new entity with a new ownership structure. In the eyes of the workers' compensation carrier, this information is a significant change in the organization structure, and as such, a new policy has to be rewritten for the group. So again, ABC, let's say I'm with State Fund, for example. I'm with ABC, my organization is ABC Company, I'm the only owner, and then I decide to get a second owner. So now my ownership percentage is 50% me and 50% John Doe, for example. When I report this information to State Fund, they would need to know the date on which the ownership changed, whether or not there's any change in my business organization, like, am I selling new products? Am I providing new services? And if there's any sort of change in terms of the FEIN or my entity structure, did I change from a corporation to an LLC? Once I provide that information, the carrier is then probably likely going to say, okay, because this is a new organization, we need to terminate your old policy because that business essentially doesn't exist anymore in terms of work comp. And now we need to rewrite you a new policy for your new organization. And that's why we have to make absolutely certain that ownership is kept up to date. And if the group is deciding on changing their ownership or entity structure, we need to know in advance before that ownership structure change occurs. That way there's plenty of time to submit the information to the carrier as well as to the Work Comp Insurance Rating Bureau so that everyone's records are kept up to date. It's also so that there's no surprises. And another consideration kind of related to the entity structure and ownership change is making sure that waivers are always sent in timely. For workers' compensation, owners are the only members that can waive workers' compensation. And in order for them to waive, they need to sign an exclusion form, kind of like with the medical cares where we almost always need waivers on hand. This is the exact same process. And for work comp, the reason making sure waivers are sent in timely is because the date the waiver is sent to the carrier is the date the individual in question is excluded from workers' compensation coverage. And if an owner does not waive workers' compensation, then we need to update premiums accordingly because typically an owner of an organization has very high payroll. So we just want to make sure that the premiums are kept up to date and that there's no surprises when an owner's payroll is included in the premiums, why there's a kind of a spike in premiums. We just want to make sure that there's transparency and to set expectations for groups. Finally, the last consideration, or gotcha, I guess, is the audit. A lot of times groups forget to comply with their workers' compensation mail audit. Effectively, since the dawn of workers' compensation as using payroll as premiums, an audit was always needed. And again, this is to make sure that premiums and payroll are up to date, and it's meant to capture any sort of unreported payroll change. Sometimes a group, when they initially get written to the end of their policy term, they could have had 5 terminations and 1 new hire. Well, the carrier wants to make sure that the group, if they've been overpaying their premiums, they get that money back. And if the group is underpaying premiums, that because of they hired more additional staff, the carrier wants to make sure that there's enough premium to cover any sort of losses that might occur. So it's absolutely vital that groups comply with the audit, because failure to do so can result in the group being terminated. And I have yet to hear of any work comp carrier offering any sort of exception in terms of reinstating a group when they do not comply with the mail audit report. It's absolutely vital. So now we're going to step into some of the new exclusion rules. The way the old exclusion rules worked, and I can't really say old because this got implemented 2017, was that in order for any individual to waive workers' compensation, they had to at least submit an exclusion form. The only exception was a sole proprietorship, and this is because they're 100% owner of the business, so it's pretty obvious that they're going to want to waive work comp. With other organization entities, like an LLC, for example, an owner would need to have an ownership share within the organization and submit an LLC-specific exclusion form. And for a corporation, the owning members would have to own at least 15% ownership and submit that work comp exclusion form. And another consideration was that, again, whenever the carrier receives that exclusion form, the date they receive it is the date that is used to make that exclusion effective. So let's say a work comp policy was written January 1st, and the exclusion form was sent in on February 2nd. In the eyes of the carrier, they say, because you submitted your exclusion form February 2nd, we will honor the exclusion going from February 2nd till the policy terms. However, we will include the owning officer's payroll from January 1st to February 1st because of the group not submitting that exclusion form on January 1st. So that's why it was very vital to send in that exclusion form timely, ideally before the group is bound, or on the date the group is bound, or on the bare minimum the date the ownership change occurred. That way we can make sure that the individuals in question can be excluded from coverage when they're supposed to be included in coverage. It's much better to send in the exclusion form earlier than later, because we don't want that owner to have their payroll included improperly just because the form wasn't sent in timely. And unfortunately, there's almost no exceptions to the rule. Some carriers way back in the past made some exceptions, but that got stamped out pretty quickly by the state. So the state kind of took a more heavy-handed approach and say, okay, carriers, the date you get the exclusion form is the date that the exclusion form can be honored. You can no longer backdate any sort of exclusions to policy inception or even a day beforehand. The new work comp exclusion rules aren't dramatically different. The only thing that really changed is for corporations. Generally, owners must have at least 10% ownership and that exclusion form in order to waive coverage. LLCs, you still need to have some sort of ownership share, and you still have to have that exclusion form. There are some more detailed nuances regarding corporations, like family corporations, professional corporations. That's something that's a separate webinar in and of itself, and I'll be more than happy to speak with anyone individually in order to hash the details out. But again, generally speaking, the rule of thumb is that an owner must have at least 10% ownership within a corporation and send in the exclusion form timely. Now, some of the repercussions of not sending in that work comp exclusion form timely is, as previously mentioned, is that premiums can jump up considerably. Again, this is due to owners having higher payroll. And let's say even if an owner does not draw a salary, the work comp carriers will assume, at least for 2018, that the owner or owners in question, they will assume their payroll is $50,700 and use that amount to calculate what their premium contribution is. And if an owner does draw a salary, the carrier will use the payroll up to a maximum of $128,700 to calculate the premium contributions of that owner. So let's say I'm an owner of ABC Company. I didn't send in my exclusion form at all. And I tell the carrier, well, I don't draw a salary. I'm not even on a W-2. The carrier will say, that's fine. We're going to assume that you have a payroll of $50,700. And we're going to take that number and add it to the payroll. And that's going to be your premium contribution. And again, as previously mentioned, the carriers, they do not backdate exclusions and they don't make any sort of exceptions moving forward. And let's say I'm an owner, like an ABC Company, and my payroll is $200,000. The carrier will say, okay, you make $200,000, but of that $200,000, we're only going to use $128,700 to calculate your premium contributions. So they'll take $128,700, add to whatever I reported my staff's payroll is, and that'll be my premium contribution. And for these situations, typically what happens is that there's always a catch-up invoice generated at the end of the audit. And again, this is because the carriers have to make sure that they're charging appropriate premiums for the appropriate coverage. And that's the purpose of the audit, to make sure that any unreported payroll change has been captured, quantified, and then charged or refunded back to the group. So now that was a lot to take in, but we're effectively approaching the end. So really, this is some of the Beere&P services. Our focus is simplicity, speed, and accuracy. We can pre-populate the majority of the Universal Work Comp app just by using any sort of employer application, or we can even do the majority of it using the group's website to help pre-underwrite the group, simplify and expedite the submission process, as well as to pre-populate the application. We can also use the group's previous workers' compensation policy doc to kind of create an apples-to-apples comparison. But let's say you're not able to get that. Any medical employer application will do just fine. We can pre-populate the majority of the information that way. And we can also directly work with your groups to quote or to service. And this is critical for the fourth quarter when you guys are extremely busy. Sometimes you might run into a group that says, hey, I need work comp, or a startup group that says I need work comp. Well, you have 101 other things that you have to do in terms of quoting, servicing, prospecting your new groups for the fourth quarter. What you can do is actually give us the group's contact email or phone number. We can reach out to the group directly and work with them directly in order to quote the workers' compensation policy and bind it and even service it moving forward. That way you guys can really focus on your fourth quarter groups and focus on your renewals or any sort of new business or any servicing you might need as well. Now, for kind of to emphasize why to sell work comp isn't just about the additional line of coverage or the additional line of revenue. That's certainly the most utilitarian part, but also it's about making sure that your groups are in compliance and we're protecting them from any sort of legal repercussions. Because to operate without workers' compensation in the United States, the implications are quite catastrophic. This is because when an individual gets caught, and it's only a matter of time, it's like death and taxes, it's only a matter of time really for a group to get caught with having a lapse in work comp coverage, is that person, the owner, can be fined a minimum of $10,000 or go to jail or go to both. And the state can levy additional penalties of up to $100,000 against that employer. So really it's kind of all the negative repercussions, the fines, the jail time, they all start to snowball because a bunch of state agencies investigate and levy fines as well. Another concern is that if an employee gets injured because of a work-related incident and the employer doesn't have work comp, the employer is responsible for all the medical bills. So kind of a frightening scenario is you have an employee or you have an employer group that doesn't have work comp. They have an employee that gets injured and has to go to the emergency room. The employer would be responsible for the ambulance bill, the hospital visit, any sort of medications needed, any sort of rehabilitative services needed in order to make that employee whole. So that's what really drives home that it's very important that groups have workers' compensation coverage. So just to summarize, again, going from top to bottom, is that work comp really covers any claim that occurred on the job or because of the job. It's vital to keep work comp policies updated to avoid trouble during the audit. We really want our work comp groups to comply with their audit, and claims need to be filed timely, and members need to really utilize care resources to find a work comp physician so that they can get treated as quickly and as efficiently as possible. Make sure that groups are compliant with their work comp obligations to avoid catastrophic fines and potential jail time. And of course, Beere&P, we really make the submission process fast, easy, and we can work with groups directly in order to service them. So this is some of the connectivity services we provide at Beere&P. We do have a Twitter and we do have a YouTube channel, so you guys can find kind of webinars much like this one, educational webinars. Obviously, we have email, it's kind of industry standard nowadays, and we do have a LinkedIn feature. And we are producing a sort of a text alert system. This isn't really something that's meant to spam you guys, but something a little more critical information like releasing of new rates, any sort of dramatic changes in a carrier, for example. Again, this is more of an opt-in service though. And again, this is more for something of vital importance. If you wish, we also provide that same service via Twitter. So if you have Twitter, we do provide regular updates via that method as well. So I want to thank you all for your time, and I will be taking your questions right now. Oh, so it looks like we had a little bit of technical difficulties. I'm glad that got resolved. Okay, so it doesn't seem like there's any questions, but again, for the new work comp exclusions, there are quite a few nuances, and this is, in that subject matter, will be an entirely separate webinar in of itself. But if you have any questions or concerns or would like to go over the details of the new work comp exclusions, let me know. I'll be happy to communicate directly with you. Something to bear in mind, though, is that the nuances really apply to corporations. So for sole props and LLCs, it's very simple. If you're a sole prop, no actions needed. If you're an LLC, just get that exclusion form in on time. And for corporations, there's a little more nuance, but that general rule of thumb is if you have 10% ownership and you get that waiver in timely, you should be okay for 98% of the time. The 2% of the time, that's more for kind of extreme bizarre scenarios that would probably be better dealt with kind of an individual communication between yourself and myself. Again, if you have any questions or concerns, please let me know. An email will be sent out to you with the recording as well as materials and my contact information as well. Thank you all so much for your time, and I hope you all have a wonderful day. Bye.